Check, check. What's up, guys? September 2nd, non-farm payroll day. There were plenty of trading opportunities this morning. Pick your poison, whether you wanted to trade the S&P, the NASDAQ, BTC, or ETH. I've kept it consistent. I've been trading ETH now for over a month primarily. Bitcoin sucks. For now, maybe. Or maybe forever. Who knows? I don't really care. So we're going to take a look at the trades that I took. Hopefully we'll wrap up this video pretty quickly and leave you guys with something good, something constructive. And by the way, if I don't say it at the end of this video, enjoy your weekend. It is a holiday weekend, Labor Day weekend here in the United States. I keep shaking my head and blinking, but we're not going to edit this out. So after Labor Day, back to business. Everybody's back at their desks. Can't wait. All right, let's get into it. All right, so let's talk about today's non-farm payroll trades. There's quite a few. There was a lot. I was long, I was short, I was long, I was short, I was short, I was short, I was short, I was short. Until recently when I finally closed out all of my positioning and finished off the day on a very healthy short from the high. So I ended up bagging it, which is always a good thing. Non-farm payroll, CPI, FOMC are all kind of the same, or rather, they're not the same, but I approach them the same. So with my particular trading, I approach these events basically the same approach with each event. I don't necessarily care about the release. It has to be something that is really significant for me to actually care about the release. Last non-farm payroll was a good example. It came in 2 times over expectations. If any of these releases, whether it's CPI, whether it's the FOMC, or it's non-farm payroll, if any of them come in at or around what the expected number is, I treat them all basically the same. I treat them all the same, and then obviously, through monitoring and paying attention to flows and seeing how price responds, I might treat one differently from the next. The play, or rather how I approach them, will adapt and evolve as price action evolves itself. So we're going to look at how I took my initial trades. We're going to watch a video, not the entire video, but I did record my trading session. So it's great if you could talk about trades in hindsight, and it wasn't possible for everybody to do that without any proof of actually trading. But I went ahead and I recorded my session today, and you'll see that on the screen there are marks where my entries and where my exits were. Now, the marks aren't going to be red or green. They're the same color, but the arrow is pointing in the direction of the trade. The trouble is, if you're just looking at it on your own, it does get a little messy, because there are times when I scale slightly out of position, where I put some on, where I take some off, where I add some, and it's going to leave a mark on the chart. So I didn't take what looks like 100 trades today, but needless to say, I took a fair amount of trades. There's a lot of markers on the chart, but I'll make sure to cover each trade as best as possible to give you guys an idea of, not only how I approach this, but how maybe you can approach it moving forward. I do think that this market is still really inefficient. So unlike legacy, there is still a little bit of a lag, an infinitesimal amount of lag, like just barely enough lag for you to be able to ride the train, ride the comet, and not get punished too much, right? If you're trading the S&P, if you're trading the NASDAQ, they're way more efficient instruments. They respond, as far as like you could tell, it looks like it responds immediately. Prices already moved considerably. But BTC and ETH, there is a slight lag. And if anything, not only is there a slight lag, there's more overthrow. So even though you might be maybe just a little bit late, because you'll see how much price travels in just a matter of seconds, even though you might be just a little bit late, there is still a meaty portion to capture, a meaty portion of the initial move. And ideally the second move after these type of events should be meatier than the prior. But we'll get into that. I don't want to get all over the place like I can and lose my train of thought. But so first thing I'm going to do is just give you some, I guess, insight into how it played out leading up to it, what I was thinking, and my game plan, roughly, that I had sort of laid out going into this. So it's the same with CPI. It's the same with FOMC. A lot of the times I'm looking to just take a very mechanical trade off the starting line, following the S&P's jump, and that's it. And I say mechanical because I don't hang on to this. I don't, hope and pray that this is going to be something that gives me 5%, that gives me 10%. It's mechanical in the sense that I am 99 times out of 100 times out of this trade. That might not be correct because I don't think I've taken it in this market that many times. But I am out of this trade at around 200, 250, max 300 basis points. So this is the time when it might be important to focus on what the actual print was, right? Depending on if it is a tremendous beat or a tremendous miss, then you might expect a lot more follow through. But almost all the time, my initial trade is playing off the jump of the S&P. So right off the release, marketing in, and then getting out of the trade at a predetermined level. So that can be anywhere between, we'll say, that 200 to 300 basis point window. And what that means is that's 2 to 3%. So leading up, here is the actual release. So we have green for the starting line. That is the actual release. So I have a 5-second chart here not because I'm trading the 5-second chart, but because after the fact, I want to show you exactly how fast things moved. I mean, you could get an idea right here. Each one of these candles, the initial 1, 2, 15, 20, 25, 30 seconds was a tremendous whip, a Darth Maul type of whiplash. Leading into this, though, looking on the left, you have the 30-minute chart, and then I have a daily chart, just for context. I'm not trading these really on anything that occurred up into them. So I'm not really focused on the conditions leading up to it, honestly, unless there is like a sign of complete overpositioning in either direction, some kind of major crowding or some kind of, very obvious weakness leading into this. For the most part, I'm treating this trade like it exists in isolation, and I'm not really focused on anything that took place into it. Right. So I'm not really focused on, funding or, where our significant levels are, because price is going to cut through anything in the initial move. If it's local, it doesn't really matter. It's not like, if price was sitting under, just to give you an example, price is sitting under a key daily level, a key pivot. It should be high time frame resistance. And let's say off the jump, the initial move is up. I'm not thinking, well, that resistance level is 0.5% away. That's probably going to be the top, right? I'm not thinking about any of that. I'm treating this trade like it exists in isolation for the most part. So leading up to this, we had a run up, right? My game plan is enter the first trade mechanically. So trying to get the jump as fast as possible. For those of you that can automate and bot this, you'll probably be better off, because you'll see that even if you miss a couple seconds, and I literally mean 2 seconds, you could be talking 0.5%. And keep in mind, as this is occurring, I'm going to show you in the video, the spread is blowing out. So when you're marketing in with everybody else, right? Discretionary traders, algorithmic traders, and that book is not as accommodating. So there's not exactly there's not exactly an abundance of liquidity when you're, jumping into that. So I'm trying to get out of that trade as fast as possible, right? It's not something I'm letting run. And then depending on how things unfold after that, I might split, reevaluate, look to join the trend, right? Again, starting to pay attention to what the actual print was. I'm not even looking at the print, honestly, when we get it, right? I'm not, because it doesn't make any sense. I can't break down what I see in the actual print and then take the trade. I'm only going off of who makes, what direction we make the jump in, and trying to be really quick with the trigger finger. But for the most part, this trade, a lot of the time, what it looks like is how it unfolded today. So the first move is a fake move, right? Sometimes this means it unfolds really quickly. So in the case of the FOMC or CPI, usually you're talking about a 30-minute to 1 hour window after, where a lot of the times we've seen that a move has occurred in that period. It's, with a ton of conviction directionally in one way, either up or down. And then after sort of an hour out, that's it, right? You have a bunch of positioning that's fresh, that's untested, unchallenged, and is, not in a position to really create a clear invalidation other than, hey, I just aped into a position chasing what I thought was going to be a much larger breakout. Once it stops moving, you have a lot of people trying to leave a crowded room through a small exit. So you get sort of a pattern where, let's say, here's the release, rip up after release, 30 minutes out, hour out, and then, you have something that completely engulfs the prior structure leading up to that a lot of the times. And that's because, especially if you have a structure that, let's say you had a structure that was leading into the event, right? And there's some kind of, positioning that is pre-positioned, okay? Longs getting in, shorts getting in. It doesn't matter. You have risk being put on here, okay? Once you go further in one direction, you just tip the balance that much more, right? So if you have, let's say you just had equal number of longs and shorts here, right? Just equal aggressive longs and shorts. Obviously, there's a long for every short. Once you jump up, you're obviously going to bring in a lot more long activity, right? You're going to have a lot of people chasing this. You're going to have positions opened at market, triggers, conditionals to get in behind this. So you bring in that much more crowding, that much more fresh positioning, so that when this unwinds, it becomes sort of a domino effect. And if you had a structure that was, higher lows all the way up, it's very easy to cascade through the structure that was printed prior. So the non-farm payroll, right? You don't even have to worry about learning about non-farm payroll, honestly. This trade is not something that really requires that. The non-farm payroll has a tendency to get front ran to some degree. So there's a lot of choppiness leading into this, right? So we're talking, this is, a half an hour window prior, and you have a move, right? From, this was ultimately, you're looking down here, this was above the prior day's high. We're beginning to balance out, right? Beginning to balance out. Okay, you have a small move within there. So this cursor is going to track. So you can't really tell because I have to change that time setting for it to break down a little bit more. Let's do that. Leading into this, right? Following here, it's in that 50-minute candle. This is a 5-second chart. No shit. Leading into this, right? Just a couple minutes prior, you have this ramp up, right? You have this ramp up again. We're above the prior day structure, above prior day's value. This looks like it's, pushing that first, second standard deviation of VWAP. It looks like this might push before the release. And in any event, then something is that much more crowded if it doesn't even begin to base out before. But nevertheless, you have some choppiness. So you have a move up, breaks down, move up again, right? That is the actual move. So this is the release. The first trade I got in, and I'm going to show you the video in a second, it was right around here. This is a 5-second chart, right? Almost immediately, a decent portion of it was behind me. I mean, I'll show you in the video, a second in, you'll see how far the candle moved from this point, right? So I'm trading ETH. I enter right here. I exit right here, okay? Price whipsaws. Right. This is not the area where I'm expecting the immediate reversal. You have to let things really play out. So I let things play out. I end up taking another long over here. My targets for longs are, in this case, because at this point you see that it was 315, expected was 295. My targets are very short-sighted. So we're grinding up. I'm thinking I'm going to try to get out around here. I end up letting it run. Right. I end up letting it run. And this is where I begin to look for what I think is going to be a larger short, something that ends up maybe whipsawing all the way back, right? This move is strong. So following this move, you can see that it's holding that 1 to 2 standard deviation band. And that's basically, we're establishing value higher. This is a strong trending move, okay? Nevertheless, though, this is something that is a catalyst from an event. So it's not something that's, on very positive news. It's not something that we're really expecting is necessarily going to run. Again, I'm expecting mostly more of the same, right? Strong move initially, unfolds, unwinds on itself, much larger reversal. So at this point, we are from the entry to there. You can see we're above that 2% threshold. So I'm looking for the short. I'm beginning to stalk the short. I think I got chopped up a little bit over here and ended up shorting this back down to the high of what is essentially dynamic value at that point, right? We're not necessarily expecting that this is going to have a, one and done move down. I end up taking profit here. I think I scratched a couple trades. We'll see the video in a second. And then we reclaim what is this 1 to 2 standard deviation band. So it's actually, I set it to 1.2 standard deviations, basically reclaimed the high of value. So if this is a strong trending move, this is price continuing to migrate higher. This is price continuing to hold value. This is not something that is going to roll over that easily. So I end up looking for the long right around here. Looking for the long, seeing many times before that when you have a strong move, right, and if this is VWAP and this is your standard deviation bands, that if price makes a move outside of this and then reclaims, a lot of times this region is a pretty good area to define a position, right? At least look for something, at least look for some kind of continuation. So I end up taking longs around here, and then I want to speed this up so we can get to the video, and I end up grabbing the short. So let's compress this to the 1 minute. I end up grabbing the short right around here. I believe right before that, I was actually looking to see whether or not we were going to get another extension from here. So I ended up scratching a position. There was a lot of trades I took today. Okay, there was a lot of trades that I took today. There were probably 4 meaningful trades that I took that completely made up for any kind of scratch, right? Especially since I basically just rode the entire thing down. I was covering, I was adding, I was covering, I was adding. I wasn't necessarily completely certain about this. But once we started losing VWAP, we're basically looking at a market that is falling back in value. It's starting to rotate again back down. It's clearly not a strong trend. I'm not expecting this area to really do much. So I ended up taking profit down here. Let's take a look at the video though. All right. My bias into this again was I want to join the first move, whether it's up or down. I'm not necessarily, interested in what the actual print is. I looked at the print after the trade, right? After I took my initial trades, my initial first trade, right? As soon as I could, right? While price is sort of outside of that 2% threshold for me where I'm done with my mechanical first trade. As soon as I had that opportunity, then I actually looked at the print. Okay, is this something that is, a ridiculous beat? Is this a ridiculous miss? Depending on those two things, I might expect a lot more continuation or something to reverse a lot faster. But nevertheless, I was expecting what always happens almost, right? Almost always. Move up like this, much larger move down. If it's a move down like this, much larger move up. And again, just the idea that in isolation, just treating this like it's in isolation, not focusing on the actual event, this is an event that brings in a lot of fresh, unchallenged positioning. So when I say unchallenged, most of it is late, right? Most of it is late. It's sitting on a really poorly built structure. We're talking about a structure that is built just for into a bunch of trades already. We're talking about a structure that's only been printed for 2 minutes, right? Taking a bunch of scalps, and we're still haven't even established our second 5-minute candle. So it's mostly unchallenged, and there's not really a clear invalidation. And if there is a clear invalidation for these trades, it's usually where everybody else's is, right? So if you have a structure that's like this, you get a break up. Okay, everyone has the same idea. That's why this area rips through. So you got stops, stops, stops. And the same thing can be said for a price that, breaks down. Okay, your stops are up here, stops are up here. And anyone who got into position here, unchallenged positioning, same thing as when it's within single prints or a gap down, all these people are going to fold once price comes back into this direction. Because, mind you, this is an event like the FOMC, like CPI, where you can get a bunch of this. And each one of these moves does not take any time to get going. So we're talking when price starts to make the turn, that panic in the next couple of seconds brings you all the way back to the starting point. So it's a really volatile period to trade. It's a time when you could make a ton of money, but it's the kind of, and this will tie into why I scratch out of positions. When something does not work for me right away, I do not hold on to it. There's too much at stake. I want to see, I have a very, high standard for how fast things should occur. I want to be in the money and in profit, the second after I place a trade. And if I'm not, that might be the turn. And I'll get back in if I start to see, more of what I want. So let's take a look at the actual video. So leading into this, though, just to give you an idea of where my head was at, this is a conversation that I was having with somebody, one of the largest traders in the space, very well-known person. I've gone ahead and blurred out some of his icon on Telegram. So he asked me, what's your read on things, on how things go today? I said something like this: I kind of expect to collapse back on itself after the open. So when I said the open, what I was talking about was the cash open. So the cash open is all the way back here, right? This is 8:30, right? So if we look at, this is 8:30, okay. Here we go. This is a better chart to look at. This is 8:30, 8:45, 9 o'clock, 9:30. Cash session, meaning that's when the equities market's open, right? So my time in the morning, 9:30, right? So the idea was all this took place pre-market. What I said was that I expected this to unravel and collapse on itself after the open, meaning after the cash session opened. So let's take a look at the video, right? And these are the trades that I took today, by the way. So this is what we're looking at. We are looking at, leading into this, this is actually, see these trades right here that are extremely close? I didn't want to take any trades leading into this, right? This was actually just to test these markers. So I just wanted to see whether or not these markers would list or not list, whether or not they would be accurate, whether or not they would show up in real time. I use Quant Tower, but I have a problem with Quant Tower. Many of you guys know that I've had problems with Quant Tower in the past. One of the things I don't like about Quant Tower is, since I don't trade on Binance, there's some things that don't get registered. For example, you can't even check your account performance. So me testing this was to make sure that with the exchange that I use, that it could actually, or one of the exchanges I use, that it would actually show up in real time. So this is the jump right here. This is the first trade. This is the close. I end up shorting within here, closing here, okay? Ended up longing here, closing here, ended up, this is where my initial, what I was going for was much larger short. This is I can't tell what time this chart is. That's why I'm getting confused. We'll see it in the video in a second. This is one of my first bigger shorts. Ended up tapping it out. All right, so I got a decent move out of that. But you can see I'm not catching the high. My initial entry was not at the jump. Had a bunch of scratches up here. Okay, this is which one is this? This is pretty negligible at this point. Not necessarily a short that you want to write home about. See, it came back up, dropped down. This is where I mentioned that I longed. Looking at, if we looked at the actual chart, this is where that VWAP was. This was the initial longs I was looking at. Starting to come back here. This is where I was still playing, and this was finally where I started to get more aggressive shorting. And then on the way down, it's take profit, cover, add, and I left on a core position that I ended up closing down here. But let's take a look at the video, because this makes it look really messy, and the video does it justice. So the time in this video right now is 12:29, I believe 38 seconds. So let me make sure the volume's down, because otherwise this video will get removed, because I had some deadmau playing in the background. Let's press play, and you'll see I'm going to pause this right after and show you guys a second after how much the candle moved. So this is where the orders are going to come up. Now, mind you, I was trading ETH, even though we have a BTC chart here. We have the S&P chart here. So if you want to focus on this, this is what I'm getting a jump on, right? This is the S&P. This is my Ethereum chart with a little bit more context, daily, right? This is the 30-minute with the profiles. This is the ladder, right? I'm executing at market through here. Obviously, this is the TPO chart, and this is the footprint I'm using. I'm not in any kind of event like this, so you might be looking at this thinking, oh, you can't really see how much volume is transacted at each point. There is a ton of volume being thrown around. I'm not really looking for any particular print during an event like this. Now, mind you, there might be something that comes up that's complete anomaly, but there's a high probability of it being really noisy. So I'm not necessarily looking for an exact number, right? I have, for each exchange, I have certain numbers that I know stand out. So if I see a certain value on Bybit or I see a certain value on Binance, those are going to be two different values. Binance is an exchange which much more volume overall, right? The footprint is going to be much different than Bybit. Bybit is one that used to be a lot cleaner. You'd be able to see where the apes were very clearly, buying the highs, selling the lows. I'm not interested in actually seeing the actual volume transacted, T minus 5, 10, 20, 30 minutes out in this event. After things slow down, then I'll start to look for that. Right off the bat, initially, I'm just looking for basically what you have here, right? This is a 1-minute chart. I'm just looking at cases where we have a candle, marking the highs. Tape is slowing down after speeding up, right? Looks like things are beginning to turn. So I have a couple ideas in mind of what I'm looking for. And also I see something like this, right? A case where price makes a high, there's a decent amount of shadow above it, or wick, whatever you want to call it. And we have, a significant pocket of volume stuck above that level. Because all we're doing is just punishing, we're punishing people that are jumping in and out of position. So let's get started. Let's see what this looks like. We're not going to watch the whole video because that would be 16 minutes long. We're at 44 seconds. We're 15 seconds out right now. So there's going to be a little movement before, right? Now focus on, you're going to see my entry right around here. I'm going to pause it. 5, 4, 3, 2, 1. That's the release. Okay. That's my entry right there. Now that is this is 8:30 in the morning, 1 second after, just beyond 1 second. So you could see, now back up a little bit, leading up to that, this is at 59. All right, so that's 59. And in a split second after, we've already lost a significant amount of points, right? The S&P is already much higher, has already cleared its prior structure, while BTC and ETH are still stuck within. So I am actually late to the trade, but still early for the move that ends up, right? That ends up transpiring. So my entry right here, I hold on just a brief amount of time for, right? Like I said, I have an idea of where I want to, no matter what, I don't want to be in, right? No matter what, the truth is, the only time when that doesn't happen, right? Because it's not like, oh, I'm going to look at the chart now and then look back and then, oh, is it past my two? I have markers on my charts a lot of the time leading into FOMC and leading into CPI, right? So what I'll do is I'll percentage bracket. I'll do it by like 1%, 2.5%, 7%, 10% out, up and down from that point. And then it's easy to see, where we sit. The only times when I don't take profit at that level, right, are when I don't get to, when it's a ripper, right? And just by luck alone, by the time I close it, right, around the level I think I'm going to be getting out, price has already skipped a beat and moved another, X amount of points. So that is something that only happens by luck, right? Otherwise, I'm always trying to get out at basically the same level. Sometimes you get rewarded, sometimes you don't. Sometimes you're long and things start moving back in the opposite direction. The thing about this trade is when you get the initial move between that threshold, so let's say up to 200 basis points, you'll very rarely see something that only moves 100 basis points because there's so much behind this initial jump. And conditions start to spread, right? So what you'll see is if you're looking down here at the ladder, I'm actually placing orders to the right. So when I get into position, I am marketing in. When I get out of position, I'm constantly clicking to sell the best ask. Now, in a highly volatile time like that, you're going to get out, right? Now, if you provide a limit, if you use a limit order to exit or try to exit your positions, you're not necessarily always going to get filled, right? It's not a guarantee. You're not taking liquidity, you're providing. In a situation like this, there's so much going on. You throw a limit at the top of the book and everyone else is being cleared through the queue also. It's very rare that you're not going to get out of that initial position, right? Within the first couple of seconds after the move. So there's really never any fear that I am going to market into the position, try to limit out by just selling the ask. In this case, I'm not, clicking anywhere on the ladder. I'm not doing anything like that. I'm just selling the ask around my point. There's really never a worry. I've never had the experience where I haven't been able to get that limit filled. One thing about this, though, as I was initially alluding to, is that after price has moved 1%, 1.5%, it's very rare that you're going to see that it ticks back even a few points. So what that means is that if price moves, let's say it moves 100 basis points, if it recovers that, or retraces that by 50%, it's probably done. It's very rare that you get something that, in the event that it spikes up like this, pulls back to here, right, and then continues. Most of the time, you're at least clearing that gap, right? You're at least getting to that 200 basis points level out. And the times when you don't are times when I just want to be out of the trade. So the thing about this is, if I get in here and we start to come back to my entry, I just get out, right? There's no way that I sit on this and think, oh, the first move was, up. This is going to kind of shake out here and then continue because the first move should have more legs. Abso-fucking-lutely not. I'm out of the position. I'm not going to use a hard stop down here where I just let this go and, see how far it takes me. Maybe in some cases that might be better, right? It might be, sure, there's probably anomalies and, events where maybe it would have been favorable to do that, but I can't continue to stack that in my favor. Or at least I can't sit comfortably continuing to stack that. So the initial jump, right? We'll let this play. Now, this is going to be right where I take profit. I'm going to adjust the screen because we're out of the window. Pretty sure I actually took profit. Yes. So you could see my first move was right here. It's around a 16, 17 point move. Now, with the size that I'm trading, it's slimmed down for events like this. So again, if you look at how the book is responding, just focus on this. Focus on this region. So this is best bid, best ask. You're going to see that it's going to jump, right? The spread's going to blow out. I might have rewound it a little bit too much, but there you go. So you see that hiccup? See, the book is just burping right there. So I don't know if you could tell, but at that point, it just exceeded this box. It's exceeding the box. So with this, it's not a very accommodating book. I'm not trading, mega size, but I am trading enough size to where a 16-point move is enough to make my week. Honestly, a 16-point move with the initial position size that I put on is enough to make my week. The next move, right, the move that follows, not the next trade, the move that I'm ultimately looking to capture on the backside, in this case, price moving up, capture it as it moves back down. That is something that I try to size up on. It's a little bit more nuanced. It's a little bit more timing. It's, I think, more forgiving. Right at that point, things have probably cooled down and shown signs of momentum kind of waning. We're going to start getting to a point right now where I look for, or I think I take my first short. So this is a smaller short. It's around half the size of this initial long. So I'm not completely certain. I'm thinking, okay, the S&P is still charging. You're going to see, I think, pretty soon. I think it's at some point I'm going to zoom in here. It's just not something that I'm comfortable holding. It's very early still. It's not necessarily the case that this would be a time where I would expect a reversal right away. No major, number compared to expectations, right? 315, more than 295, but almost half of what last month was, right, when it comes to actual non-farm payroll print. So let's zoom forward. There's the short. So you're going to see I'm going to place it in 1 sec. Okay. So what I'm doing is basically I'm off the high, right? Because I didn't flip and reverse right off this move. That'd be great, right? I'm closing out a long and then dumping an equal size position short. Again, there's probably a lot less liquidity up here at the end of this initial move anyway. So what I'm doing is looking for the unwind that I might see come back down to this low, right? I'm thinking, okay, maybe I'm going to get this coming back down to this low. Maybe we'll have some kind of sort of Dorth Mall right now. Dorth Mall. Dorth? Who says Dorth? All right, so I'm short. Looks like we might get something that spikes down. And you can see the initial move. When I got out, you could see I basically got out where everyone else got out. This little pocket right there. Press play. So now it's coming back at me. I'm definitely not going to hold this if it comes back to me. So I took it out right there, meaning I close the position out right there. So we're going to fast forward a little bit more. You can still see we're above, right? We're above the prior day's highs still. We're pressing that 1 to 2 standard deviation band, right? 1.2 to 2. Price holding decently here. Right? I end up selling, closing out, still kind of looking for a reversal, thinking maybe we get one initially right here, thinking maybe it's going to follow. And then we're starting to hold that band. So I'm going to fast forward. Now it looks like, we'll back up. It's right here that we're beginning to form sort of this pennant. Okay, so at this point, when price is funneling and it's really volatile like this, the move is usually going to extend at least a measured move of the initial funnel, right, of the mouth of this funnel. Now I'm thinking maybe we get back up to the high, and I'm thinking if this breaks down, we're at least coming back to the origin. So at least now it's beginning to paint a little bit clearer. I'm scratching in and out positions right here. Not bad though. I'm thinking, okay, the next move is probably going to be certain, right? Because we're tightening up, right? So if we get the next move and we start poking up, we start drifting up ever so slightly, maybe this is going to be something that takes us back to that high. And again, thinking that odds are the initial move has more legs, right? This is we're talking about just a couple minutes into the print. So now I'm long right here. You'll see I'm going to long. Looks like it's holding. Now you can see that I marked off this level, right? This level right here on exo charts. This is where a high volume pocket of volume, this is where a large pocket of volume is isolated. So if we recover this, right, and I assume that we're funneling and there's probably an equal amount of aggressors, right? This is an assumption. Someone's going to puke, right? And in these conditions, the small puke by one side that's committed in a tight range is going to take me to, my next sticky area. So I have that level marked out. We're sitting above it. I'm going to long. Did I end up long, or now I'm thinking that, oh, there's the long right there. I'm thinking I already longed. Okay, so if we don't zoom in, it's hard to tell. There we go. We're going to see it. Okay, so that's the long right there. So do you see how there's a little, it's almost impossible to see, but the arrow is pointing up. After I played it, I'm thinking, I know I long that. So the arrow, I'm long. It's holding that level. It's holding this. No major break. Right, looking at these prior lows leading up to that. And then we squeeze. So in F5, might get like 10 points out of this. Trying to get a limit fill. Now, you guys remember I said I'll always front run the high. Okay, so this is the prior high. I am never going to, and a lot of times I do this with market structure in general. I'm never going to be the one that waits, right? So the one that waits for, now price is going to unravel a little bit more higher. I'm not necessarily interested at this point. We're starting to extend further. I am never going to wait to the last minute at the obvious level to take profit. I almost always front running the idea that I have in mind, that even I draw and I say, hey, that's the level that I want to be out. That means that I want to be out before then. Okay, so now we're extending. Spread's still blowing out. This thing is still moving. And this is a much larger move that I'm not behind at this point. So I end up missing this, and that's fine. We're going to come back. I don't think I actually got this entire recording. I got this short, so I think I scratched a couple times, because at one point I just stepped away, made myself some oatmeal. Let's see. I know there's a scratch in here, and then there's the first larger short. So that's scratched out because you could see I went to short it, scratched immediately when it doesn't work. Now we're forming this little consolidation here. Little consolidation, volume is stuck above the highs, right? We have a little bit of wick action over here, and I'm short right there. So you could see the last arrow pointing down, and I'm expecting that this might move pretty quickly. Okay, so again, if it doesn't move quickly, and these are expectations that I have as a human being, not necessarily the best idea, right? Because again, I'm applying feeling to this, and it might not occur that way, right? It might not occur all the time, right? I might be completely wrong, but I want to see this puke. Okay, so this is something that I'm thinking, all right, I'm short. I still have a little bit of distance. This is going to give me some kind of reward, right? So we'll let this fast forward a little bit more. As long as we're holding that little consolidation, I'm fine. We have a little flip, that's why. So I should box this out. The moment that we actually come back at my entry, you can see prior, I just scratch. So we get a little bit more of a spike down. Still short. Catching a little volume below the low now. So if it's burping and it's not puking, that to me is a problem. So I ended up taking profit there. So if I back this up, you'll see that into that low. So here I am short, and then we burp a little bit, and it's kind of like the big moves that happen. You get the burp where the spreads blow out, tape speeds up, and then you get the big move, right? And then you might have to decide, all right, I'm going to hang on to this a little bit, or it's going to wick back up halfway, but at least you're well in the money. But instead, price moves down, burps. Get that little burp, you see that? And then we capture that volume below the low. And at that point, there's a lot of bobbing and weaving, so I'm not hanging on to this. So I'm just out of the position right here. And we're at the end of the video. So this ended up going on for some time, obviously. I ended up stepping away, but I took multiple trades throughout the day. Now, there was a lot of scratches within here. To be honest, there was more scratches than I necessarily wanted. And I immediately, and there was a couple longs within here, like I said, and I thought that I had it in this video off of value, but I ended up cutting this much earlier. Here I was thinking that I let the video run to this point, but meanwhile, this was all the video right here. There were a couple scratches within here, right? I ended up thinking, all right, so if this is holding value, maybe we're going to get a much larger third push, take out that swing high locally on the daily. But again, if something doesn't work, I'm not thinking in terms of the daily. I'm thinking in terms of right now, right? A highly volatile trading session. So I ended up scratching a few times, still up for the day significantly. But this is where I made my money for the day. Okay. This is where I hammered short. We had a break of market structure. Market had slowed down considerably. And then we had, again, you can't see this in the charts, but we had the S&P begin to unfold, right? S&P began to unfold. I was short, And the Gazprom, is that how you pronounce it? News couldn't have came at a better time. So market structure break. We have tailwinds in the form of some bearish catalysts. And from here on down, we're looking at a structure that is more than likely after it breaks higher time frame market structure, locally at least. So here we are beginning to break back within value. Let me change the ink. Right here. So after we fall back within here, it's pretty much game on for ranging again. So I'm not looking at any kind of support within here, maybe brief support at VWAP, but the odds are that after an event like this, with that kind of catalyst behind us, right? Because mind you, when we're at VWAP, we already know what's taking place, and the S&P is unfolding even more. So crypto is kind of holding up, which never means anything, right? It just means it hasn't caught up yet. It's a very high probability that we're going to just take out the lows. So this entire gap that we had created within value just becomes a very easy area to traverse. Right? So on the way down, I'm just adding, I'm covering, I'm adding, I'm covering on pops, I'm adding into the break. So a lot of the times into the move, right? If we have a move like this, I will cover and then I'll add at the sign of weakness again. So add into what looks like another breakdown in progress. And then the same thing down on the way down, cover, some kind of continued break of structure, add into that, and kind of just try to pressure the market with everybody else, right, to get that momentum going. This last move I actually had pretty clearly drawn out. I wasn't necessarily going to continue to add into this, but then we had this structure begin to form. It's very unlikely that after a big move like this, especially when you're kind of hanging around prior lows, that you don't get something that looks very violent off the low. So being that this was kind of, pretty, I don't know how to describe that. Just, there was no major response, right? It was almost like price was what? Just kind of find a very calm floor, right? Just start moving sideways. After a move like this, I just can't imagine that would have been the case. So you're looking for some kind of significant snapback, which we didn't have. So once we broke down, I just sold into that breakdown again. I will never really look to buy or sell after a long move past these bands. All right, at this point, this is kind of trap city. So hopefully you guys enjoyed this. That was my trading day. Right? If you have any questions, feel free to hit me up on Twitter. Please leave a comment. Please subscribe to the channel. Share the channel if you like it. And I look forward to the next video I put out. Have a fantastic weekend. Enjoy your Labor Day weekend if you're in the United States. If you're not, hey, enjoy your weekend.